Hey folks, Gary Dean here at Sentiment Timing. This is our technical video report for Wednesday, March 25th, 2026. Actually today it's 25th. So we saw the bulls continue to push higher, and I'm going to say this where I would not be surprised if we're at the beginning of a major short squeeze where we could see the spiders testing the highs again. My reasoning is this: is that just working off of what our liquidity indicator is talking about, and I've gotten a lot of questions about, if you're not a day trader or something. Well, when you're seeing this type of move, and again, these are they're not lagging indicators. They're telling us what institutions are doing right now. So when you see from here where the spiders went from 655 all the way down to 645, 100, well, 10 points, you just saw liquidity buying. So what you want to do is actually just watch for them and what they're doing. You can see they were buying right at this last dip right here. That's where we had the massive gap up, but they started buying here. They were definitely early, but my point is when you see them buying this entire drop, typically what happens is you have all the retail that's on the wrong side and all the institutions that were buying down here that were probably selling up here. And that's the way this, it's like a pendulum that goes back and forth. And what they want to do, the institutions want to catch this middle right in this area here. So when we're up here, they're selling and they're waiting to buy down at the other end of it. So with the actual amount of buying that I saw, I went back and did some testing on it, and the last time we saw this, we saw the S&P. I mean, it ran up almost 8%, and it was in one of those straight lines. I'm not saying it's going to happen like that right now, but I'd be, and I put it in the morning notes, I'd be very careful shorting right now just because even we're only, what, 5% off the highs after a major rally, and everybody I'm talking to is bearish on this market. Everybody. And when that starts to happen, you typically see these massive runs and then they don't let them back in until they get to the top, and then they let them in and they bring it back down again. And as I said, with these with the divergences that I'm seeing right now on longer term charts, I'm not gonna, I would not say that this is not the low right here. It could be, because we could see a major short squeeze, but we're going to trade the daily basis. This is just a longer term. So if we go to a 15-minute chart, again, just looking at liquidity on this way down here, as everybody was panicking, selling, they were buying this entire dip right here. And from there, we saw that massive gap up right into our primary distribution. From there, we started seeing institutions sell, and these aren't day trades. Like you can, you're taking this on Friday as the market, as the S&P is crashing, and you're selling in a matter of hours because you're up almost what is that? We went from 640 almost 18 points on the spiders until we started getting sell signals here, and then you got another 9 points on the downside. So it's these are leading indicators. They're telling you what institutions are doing. Are they buying? Are they selling? And here you saw on this dip, they were buying, and we had a lot of duration on our liquidity divergence, even though we had we had not a whole lot of room on our duration indicator. But in any case, these are both pinned to the bottom, and we got a nice bounce up. And if you just look at these dots right here, they're almost at the exact top every single time. Here you go. Yeah, and this one was a dip, and then they ended up buying. This one, yeah, it was a buy, but it was on this wick right here, and it went up. But in any case, the bulls are going to have to get through this distribution. If they do, then we're going to see a quick bump up to somewhere into the 669, 666 up to the 668. That would be my upside target on it. We could go up and close this gap, but right now these would be the next upside targets, and we're not really seeing any divergences. So that you can see, even as we were dropping, we still see liquidity moving up. So I'm not really concerned on that end, and I believe that even if unless some big geopolitical thing happens, if we get any gap down, they're probably going to buy it back up. We do have this open gap here, so we have to keep an eye on this, the 648. And let's take a look at the 5-minute chart. And this was, I'm going to give you an example of What happened today? Because I have a new purchaser of the software, and he trades the ES, and he asked, is it good to use on it? And I was perfectly honest. I said you could use the ES in after hours. I said, but during the regular hours, I'm like, it's not a good indicator, and the reason why, because it runs 24/7. So liquidity and our indicators get all skewed from it. I said, what you want to do is you want to follow the spiders with the software. And when that gives you a buy or sell signal, you move it over to the ES and you take a buy or sell signal. And today we were in the room. I'm actually even going to show you because this was at 9:37. And I said, what I said, what did I say? I'm seeing sell signals on the SPY. But I said that we're in the major innings of a short squeeze, so I wasn't, I just mentioned it. I said we got this. That was at 9:38. So if we go back, look at the spiders, that was at 9:35. So we got the sell signals coming in, and that we saw liquidity dropping. We got our sell signal, and we saw the spiders go from 660. I mean, just take the first dip here down to 655. So that's 5 points. That's 50 points on the ES. We bounced up and we didn't get any signals. So you can see there was no buy or sell signals. We got a buy on this one, which I wasn't in on it. I was trading the IWM. But in any case, you got the buy, but even from here, it went from 655 all the way back up to 660. So that's another 50 points. And this is, I mean, that's talking top to bottom, like if you got the exact bottom and exact top. So you can shave 4 points off. It doesn't really make a difference. I'm just throwing out where, where the buy signal went and where the high was. So I'm realistic. I know you're not going to catch the exact top and bottom on it. But in any case, look at this. As we're heading down here, look what's happening to liquidity. It's heading up. So we ran right into our primary accumulation to the second row of it. And we had a good bullish divergence on liquidity. If we look at our buy and sell pressure, that actually didn't give us any kind of signal, but it was just pinned to the bottom. So there was duration to get to the top. But we look at the buy signal we had here. And from once we hit into the zone, we saw the spiders run from 654 all the way up to 658, another 40 points or 4 points, but 40 on the S&P or the ES on it. And then we didn't really see any sell signals until we started getting in this area here. And this is a little bit of sweat because you're at 658.29, went up to $1.25, you're down. But again, look what happened. We got the drop down from there all the way back down to 655. So it wasn't a big move on that. I'm not lying. But at the end of the day, look at what liquidity did. It's shooting up. We didn't have any bullish or bearish divergence. We just saw buy and sell pressure moving. So that gives us a hint. There's a chance that we're going to open up on the upside tomorrow. We have to, wait and see on it. But, this is usually some kind of tail because typically when they're rushing in before the close, something happens. But we'll see. I'm not predicting that at all. We just go by the signals. So let's take a look at IWM. Again, longer term chart. The entire drop, we saw buying. We saw buying this entire time. Like I said, I would just be a little careful looking heavily on the bear side because there's a lot of institutions that are along this market right there. The only thing is we do have some kind of bearish divergence here. So we see that this was the top here. That was the top. We're heading down. So to me, I'd be a little cautious on IWM because there's a chance we got to come down and do some backing and filling. But it also went from 239 all the way up to 252. So it's been a nice run. But let's go on and see if they move higher. And well, this is taking us from this low to this high. And this is our primary support area between 646.81, 645.17, and then we have the 643.06. So if we saw some backing and filling, keep an eye. I'd say this would be the first one, just a moving average at the 249. Below that, then you anticipate we're coming down to these levels there. Again, end of the day, look at the buying going on. So, and we don't really, yeah, we did have some bullish divergences. Even on this drop right here, look at our liquidity divergence indicator heading up. From there, we saw IWM make a nice run back up to the 52. And we traded IWM really well today. It was conservative because I always had a hedge position, but we were taking the positions as the market was heading the other way. So we were short, and then when it dropped down to the 250s, I think in that range there, we got long to 252. So we were always hedged, and we ended up getting out of the positions right before a larger drop started. So here you go, IWM 5-minute chart. I mean, this is perfect right here. We had this big move down. From there, we had buy, and now we had IWM going from 250 all the way up to 251.75. But if we look, that's just at the end of the day. That was just a perfect buy. But this is where I think is amazing looking at this stuff. So yesterday, towards the end of the day, we're dropping. So here's our buy signal. Here's our buy signal. So you're talking right around 249 down to 248, gaps up to 252. It's just an easy, not easy, but it's a great setup. But once we got up here, that's where we started seeing selling, and what we saw IWM go from 253 down to 250. 3 points. Again, those options are a lot cheaper. You're going to get them for $1, maybe sometimes get them for 80 cents. So you get them for 80 cents and you see a 3-point move and you buy 5 of them, you're risking $400 and you're making 2,000. But then look at this again. When we dropping down, we get the buy signal almost at the exact low on the candle, and it shoots back up even higher than where it was. And then you start seeing a divergence take place. We didn't get any signals, so I'm not going to take credit for that, even though I did get, because I'll tell you what, let's do this. 2-minute chart. This actually gave us, I'm going to hang on 1 second. Okay, the original, when we did our original institutional pivot matrix, where we had just the accumulation distribution zones, and then we had the buy and sell signals. To me, it's almost, I'm looking at it as a lagging indicator. I don't know why. I'm not a big, I don't really follow it all that much anymore. I'd rather follow what the liquidity is doing, because it makes it a much easier setup. So this is IWM. Here you go. We get your gap up. We got a sell. We got a buy pressure sell. That's where it ran from 253 down to 250. But look what happened. We were down here. Buy signal ran right back up to the 253. And again, as we're up here, here's a sell signal. Back down again. So this was, as I've been mentioning, there's times that you have to figure out what time frame that the index or whatever you're following is working off of. And today was a 2-minute chart on IWM, because you can see, as we were at the top here, we got a sell signal, dropped all the way down. We got a little bit of an early buy signal, but even from here, 250 up to 251.87. Another buy signal back up, sell signal, that give it a little bit, but again, buy signal at the exact tops. This is it, we were able to scalp these, and we were hedged every time. So we weren't making huge profits, but we're making a few $100 on each trade, and we made 3 or 4 of them, and we did really well. We didn't have any losing positions, but just looking at where this goes. So if IWM, if it heads up, what I'd be doing, because I'm not really seeing any major red flags right now. Even it's liquidity's moving up on every dip, and when we get the big rips, obviously they're selling. But I still wouldn't be surprised to see IWM testing the 255 before it's over. But we are pretty oversold right here, or overbought. So backing and filling to maybe close this gap would make sense. So anyway, we have a special going on right now. I'm doing a webinar tomorrow. It's at 12 o'clock. There's a registration link that's going to be in here, and also we're doing a little test trial. I don't know how long this is lasting, because There's a lot of manual back end stuff that we have to do, but we're going to give a 2-week trial. It's going to cost $50 because like I said, there's a lot of back end stuff we have to do for 2 weeks. You get to use the software. This is only good for TradingView, not Thinkorswim. But if you want to keep it, then you do the $3.99. But at least let you test it out and see how it is, because in 2 weeks you'll probably be able to make 10 times what the software is worth. So that's what we're kind of banking on. But in any case, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.